Inside OpenAI's boardrooms, absolute panic is starting to set in because, well, behind all of Sam Altman's public victory laps, the financial records are starting to show that every single prompt ChatGPT generates is burning through way more cash than the company can ever raise. The entire multi-trillion-dollar tech sector has leveraged its future on a massive, debt-fueled AI infrastructure bubble, while Silicon Valley executives are trapped in a psychological ego loop. Executives are desperately double-dipping on toxic debt and fake metrics because admitting the truth would erase hundreds of billions of dollars in paper wealth overnight. So, how does a company claiming to lead the next industrial revolution end up hemorrhaging $1.22 for every single dollar of revenue they bring in? The answer lies in the financial shell game that makes the dot-com crash look like child's play, starting with OpenAI's desperate push for a $1 trillion Wall Street coronation. To put the unadulterated audacity of that number into perspective, $1 trillion is roughly 4 times the size of Alibaba's historic 2014 public debut. Yet, the mainstream tech media and retail investment community are swallowing the hype, hook, line, and sinker, framing this upcoming listing as a undisputed coronation of the king of our computing future. But pull back the curtain. CEO Sam Altman and OpenAI's executive suite aren't presiding over a golden computing empire, they're sitting directly on top of a ticking, screeching time bomb. Well, perform a rigorous financial autopsy on their underlying corporate architecture, and you find a structure that is completely and utterly unsound. In March 2026, their private valuation was pegged at $852 billion. The jump to a $1 trillion public target isn't a standard liquidity premium, it's an unbridgeable chasm of pure fantasy. To justify this absolute heist, OpenAI has to project growth metrics completely decoupled from macroeconomic reality. Financial analysts show, well, OpenAI is literally hemorrhaging $1.22 for every single dollar it brings in the door. Spending $1.22 to make $1 is not a minor scaling issue you grow out of. How do you push a $1 trillion dream to institutional investors while your unit economics are an absolute dumpster fire? You pull the numbers directly out of thin air. OpenAI is internally projecting a staggering $280 billion in annual revenue by 2030, claiming a jaw-dropping $100 billion will come directly from chatbot-based ad placements in ChatGPT. Sounds incredible. Well, no. Let's look at the total addressable market. Independent analysts at eMarketer project that the entire TAM for chatbot advertising in the United States will cap out at roughly $5.4 billion by 2030. OpenAI is telling Wall Street investors that they alone will pull in $100 billion globally. That is nearly 20 times the maximum projected size of the entire US market. It is the economic equivalent of trying to sell 100 million stadium tickets to a venue that only holds 5,000 seats. It's mathematically delusional and pure unvarnished fucking propaganda. To hit that target, global advertisers would have to completely abandon decades of highly optimized Google search infrastructure overnight, all while completely ignoring the fundamental physics of digital advertising, which is intent-driven search maintains structural advantages over a conventional interface, which means, well, people want a direct link to buy. They don't want a long-winded, hallucinating chatbot subtly pitching them dish soap mid-conversation. Because OpenAI still operates behind a complex private corporate veil with zero mandatory financial auditing, the executive team has resorted to shameless metric manipulation to hide their catastrophic profitability and maintain the illusion of exponential momentum. They frequently parade tech headlines shouting 1 billion monthly active users. But what constitutes an active user? Well, Web Analytics exposed that OpenAI's automated internal systems like GPT Bot and ChatGPT Agent generate an astonishing 69% of all verified AI bot traffic across the internet. They are folding machine-generated automated crawlers into engagement narratives and presenting them to gullible investors as organic human growth. OpenAI logs single prompt visitors, users who ask one question, get hallucinated garbage, and close the tab, and never return as dedicated active users on their balance sheet. To hide this massive user churn rate ahead of their grand IPO, OpenAI aggressively pivoted to pushing annual recurring revenue. In standard enterprise software, ARR represents a rock-solid, predictable baseline of guaranteed income. In this case, OpenAI is using it as a complete camouflage. When a confused consumer drops $20 for a paid tier, fails to solve their daily workflow problem, and immediately cancels, that signals a completely broken product market fit. OpenAI bundles all those temporary, fleeting one-month signups into a massive top-line ARR figure to sweep that volatility under the rug. When a disruptive technology fails to generate immediate, scalable, real-world economic value, Silicon Valley pivots. They abandon basic financial metrics for existential science fiction jargon to maintain the hype machine while securing massive infrastructure capital. For OpenAI, terms like artificial general intelligence and the singularity serve primarily as critical marketing smokescreens to justify a staggering financial demand. One example is Project Stargate, a multinational joint venture aiming to spend up to $500 billion to build a massive 10-gigawatt AI infrastructure network by 2029, funded by massive debt syndicates. To justify a $500 million corporate credit line to bondholders and sovereign wealth funds, you cannot admit you're building a tool that writes basic email templates. You must promise digital divinity. But strip away the glossy sci-fi metrics and marketing and Sam Altman's press conferences, mainstream AI today is just a collection of vector databases, transformers, and neural networks operating on probabilistic token prediction. In brutally honest English, they haven't built a digital god, they've built a hyper-bloated version of autocorrect. And that glorified autocorrect is hitting a hard physical wall, which is called, in this case, model collapse. The foundational premise of AGI, the feeding more data into raw computing power into a large language model equates exponential intelligence, is breaking down. So instead, companies are now recursively training new models on synthetic AI-generated data. They're feeding the models its own regurgitated content, causing factual fidelity to degrade into the digital inbred gibberish. So that means the singularity is not approaching near. It is a calculated financial construct designed to keep institutional money flowing into the machine. Authentic technology revolutions like broadband or the smartphone possess self-evident organic utility. Generative AI is experiencing the exact total opposite: forced adoption. Tech executives and desperate software vendors are now shoving bloated, unwanted co-pilots into every single tool we use, creating massive feature fatigue rather than genuine productivity. Nowhere is this clearer than in software development. Early hype claimed AI tools would yield 10x speed increases, yet a landmark 2026 randomized control trial conducted by Meter, evaluating experienced developers using state-of-the-art AI coding agents, revealed the truth. Developers using AI coding tools were 19% slower at completing complex programming tests than the control group that didn't use them at all. Why? Because the agonizing time required for human engineers to perform rigorous code review, refactoring, and security auditing on AI-generated hallucinations acted as a massive, lingering tax on productivity. OpenAI's entire trillion-dollar valuation is heavily predicated on them being the sacred first mover, but history is littered with first movers who bore the bankrupting costs of market education, only to get completely wiped off the map by fast followers. Remember MySpace before Facebook? Yahoo before Google? Well, history is repeating itself. Mid-2026 enterprise data from RAMP, tracking actual corporate spending across thousands of businesses, proves it. Anthropic's Claude has officially overtaken OpenAI in the United States for enterprise AI adoption. Anthropic didn't win by outspending OpenAI on flashy consumer marketing. They won by building a safer, more reliable product that is significantly better at actual coding. By burning billions to acquire a fickle consumer base while systematically losing the high-margin enterprise developer layer, OpenAI is positioning itself to be nothing more than the MySpace of the AI era. If 2023 was the peak year of corporate FOMO and 2026 is the year of severe, systemic enterprise ROI fatigue, CFOs and finance teams are finally auditing those blank check experimental AI budgets. Well, MIT's Project Nanda revealed that 95% of enterprise generative AI pilots failed to deliver any measurable financial return. dying instantly upon contact with terrible corporate data readiness, massive integration fatigue, and severe legal compliance risks. Gartner forecasts over 40% of all agentic AI projects will be outright canceled by the end of 2027 due to exploding operational costs and desperate software vendors fraudulently rebranding 10-year-old automated scripts as autonomous AI agents. While the raw price per individual AI token dropped by 98% between 2023 and 2026, enterprise AI bills tripled, jumping from an average of 1.2 million to a staggering 7 million. How? Because of the invisible compounding multiplier of agentic workflows. A simple single AI interaction that cost 4 cents in 2023 morphed into a recursive multi-step orchestrated loop costing $1.20 in 2026. A 30x jump in cost per action. Massive enterprises like Uber literally blew through their entire annual AI coding budgets by April, simply because automated background agents spiraled out of control. Faced with a massive exodus of cost-sensitive corporate clients, OpenAI reacted with pure, unadulterated panic. They recently executed a massive, desperate price slash, cutting the cost of their flagship GPT 5.6 Luna model by an unprecedented 80%. OpenAI's PR spins this as a, breakthrough in hardware efficiency, but the reality is they're knowingly pricing their API below their physical cost of computing to prevent clients from fleeing to open source alternatives. In a commoditized market, this desperate race to the bottom completely destroys the gross margins required to service their $500 billion infrastructure debt. This dynamic directly mirrors the industrial robotics bubble of the 1990s. Factory managers assumed multi-million-dollar robotic arms would automate every single piece of manual labor, only to hit a massive economic wall when they realized standard human labor augmented by cheap, reliable hardware was vastly more adaptable. Large language models are hitting on this exact same wall today. Enterprises are waking up to the fact that, well, they bought a multi-million-dollar robotic arm to do a simple $10 job. Simple deterministic code, basic databases, and standard SaaS tools can accomplish the vast majority of corporate tasks with 100% accuracy, zero hallucination risks, and for literally pennies on the dollar. The ultimate existential threat to OpenAI isn't Claude or corporate budget fatigue. The fatal blow is coming from inside the building itself. The calculated strategic maneuvering of OpenAI's primary backer, Microsoft. During Microsoft's Q4 2026 earnings call, CEO Satya Nadella smiled at the camera and quietly slid the knife right between OpenAI's shoulder blades. He delivered a blunt warning to enterprise consumers worldwide. Do not rely on a single frontier AI provider, or you risk operational survival. Nadella urged corporate clients to adopt a harness architecture, hosted entirely on Microsoft Azure, of course, to securely hold all corporate data and logic. The underlying AI model itself gets pushed to the absolute extreme perimeter, treated as a cheap, swappable, completely interchangeable plugin. The reality is any model at any given point should be swappable, or you'll be dead in the water in a few months' time. That sentence is a cold-blooded execution of OpenAI's entire business model. Nadella essentially told the global business community that OpenAI is just a disposable commodity battery, and Microsoft owns the flashlight. If a major corporation can hot swap GPT out for Google's Gemini or Meta's open source Llama based on real-time microcalculations of latency and price, OpenAI possesses zero durable economic moat. Microsoft is actively commoditizing the model layer, ensuring all high-margin, sticky enterprise value flows directly into Azure while reducing OpenAI to a replaceable utility vendor slinging raw compute. OpenAI possesses raw technology, but Microsoft possesses actual products, global distribution pipelines, and deeply entrenched corporate ecosystems. Massive corporations are now taking AI development entirely in-house, rather than paying OpenAI a massive premium for generalized AGI hype that hallucinates basic facts. Well, companies are building their own highly specialized narrow AI models trained exclusively on their own secrets. Look at Microsoft's recent launch of Maya Cyber 1 Flash. The proprietary cybersecurity model developed entirely in-house activates a tiny fraction of the parameters compared to ChatGPT, trained exclusively on Microsoft's decades of private vulnerability patching data. It achieved a staggering 96% success rate on security benchmarks, easily beating OpenAI's top-tier generalized models, all at half the operating cost. This completely destroys OpenAI's valuation paradigm. Generalized, eye-watering, expensive AGI loses every single time to fast, narrow in-house models embedded directly into existing enterprise workflows. Stripped of its singularity marketing, bleeding cash on every single query, and facing an enterprise market actively commoditizing its core product, OpenAI is not the undisputed architect of our technological future. It is a vastly overvalued, hyper-hyped research lab hurtling towards a violent, catastrophic collision with public market realities. And when the biggest backer on Earth officially classifies your core product as a swappable, disposable commodity, while your chief rival is forced to lease its idle supercomputers just to service its debt, the entire trillion-dollar AI narrative collapses directly into the ground, which is exactly why you need to watch this next video right now to see how the impending tech crash is about to wipe out retail investors holding the bag. Or you can just get the fuck out of here. Thank you guys for watching.